Moving on with our Binary Options Academy project here, and it is time to take a look at the practical side, or the example on the double zigzag or a triple zigzag project that we run here at Binary Options Academy. It is, let's say, the part in which we will apply it on only on an actual chart. On the first part, we just lay down the rules and how a double and a triple zigzag looks like. In our case here, we illustrated a triple zigzag, sorry, with A, B, C, and then the X wave, then another A, B, C to the downside, corrected by an intervening X wave, only for market to go and form the last zigzag. Now the same is happening on this Euro US dollar from this moment on. I would say that the move that starts from the highs here and to the lows is nothing but a zigzag and a zigzag family pattern, or a double or a triple zigzag. And remember what we've discussed on the first part, on the first recording, the fact that these moves are simply channeling too well. So when these are channeling too well, then the logical thing to do is to take that into consideration. And this channeling, as you can see, it is happening most of the times. Now, the example here on the theory was to wait for price to go into the upper trend line of the channel, but you might just go and divide it into the 50% retracement, something like this, and every time price comes into the 50% retracement and you know that the zigzag is not completed, we'll just go and buy put options in this situation until you have 2 or 3 zigzags. What would be our zigzags or the zigzag family pattern in this case? Well, wave A, starting from the highs, wave A would be this one here. So this would be wave A from my point of view. Then we'll have the B wave, and then of course we'll have the C wave, so A, B, and C, and just like that we have an X wave here. There is the corrective wave. Now by this moment of time we have no idea that this is going to develop a complex corrective wave or a double or a triple zigzag. However, by the time that market goes and breaks the previous low, so this would be the decisive moment where we should look for a complex corrective wave. Why? Because we have a 5-way structure, 5, 3, 5, an impulsive move followed by a B wave, and then another impulsive move. And by these lows are being broken, we should look for another series of A and a B and a C, and this forms a double zigzag. The B wave, and the C wave to the downside. Now of course that we don't actually know if the double zigzag will be all there is with that move. However, when the market goes and breaks these lows here, we know that, well, all we have to do now is to go and buy put options, as this would be only the X wave, so this to be A, B, C, then the X wave all the way here, probably the X wave to be done here, and then another A and B and the C to the downside. And therefore our zigzag, our complex corrective wave is being formed, is being finished, and places to buy put options are here, like this, and basically here, because this channel can be drawn from this moment of time. So here, here, and here are just places to go and buy put options. Now the expiration date for an option may be different depending on the time frame that the pattern appears, and of course the currency pair. If it is a currency pair that is consolidating much, or maybe one that is not consolidating that much, it remains to be seen. A double and a triple zigzag can be formed also in after following bearish trend and the correction to actually be to the upside. Thank you very much for being here. This is fairbinaryoptions.com. We just finished our double and triple zigzag project, mini educational series, to be found out on the website, on our fairbinaryoptions.com academy project. Thank you and stay tuned for more analysis. Bye bye.